Hello and welcome to the Mortgage Conversation with Saffron for Intermediaries. I'm your host, Tony Hall. Another wonderful guest panel today, and I will ask them to introduce themselves to you in a moment. Before we start, I just want to say that we're recording this on Wednesday, the 18th of February, so anything we discuss will be up to or before that point. And I'll also state that the views and comments that we may express today are of ourselves and not necessarily of our employers. Cool, let's meet our guests. Firstly, hello and a happy 2026 to a special co-host, Alice Waits. Alice, can you please do a quick intro?
Sure. So my name's Alice and I'm the BDM for London. And today I am filling Lee's gap as your co-host.
Absolutely. It's much better to look at than Lee. So we're off to a good start straight away.
Good.
And then delighted to extend a big The Mortgage Conversation welcome to a first-timer and a seasoned friend of the show. So, David, let's start with you. If you could just tell our listeners where you're from and what you do, that would be fantastic.
Absolutely. Well, great to be here. David Coleman, Head of Sales at Positive Lending, specialist broker, packager in the market, supporting specialist lending needs.
Brilliant. Welcome. And obviously, little introduction needed for Dan the man, seasoned friend of the show. But Dan, if you could do the honours, please.
Yeah, I'm Dan Gracie. I've been a mortgage broker 20 years. I now work primarily with large or complex mortgages, and I work with Panthera Finance.
Excellent. Good. Thank you so much, chaps. And Alice.
All right, I'll be a chap for the day.
Yeah.
Fine,
Chapesses.
Thank you.
So I'm going to slightly go off script because I like to do that. But the focus for today is the rise of MIBs, all right? And there's no Will Smith or people in black suits. This is about multiple income. Multiple income borrowers and how the specialist lending is evolving to meet a growing demand. But before we get to that, one thing that I think would be really helpful for our listeners is a bit of, if you don't mind, a 1 minute bio each of how you happen to be where you are today and how it all kind of started, just so that our listeners can really get to understand who you are and why what you've got to say is worth listening to. So if I start with you, David, if you don't mind.
Well, I'm in the industry by pure fluke.
Most
I knew
of
nothing
us
about
are.
mortgages and got invited into it. Had a short break, but I've been with Positive now for almost 9 years. Prior to that, I was with another firm for just over a year. So, and before that, I was in it up until the credit crunch in 2008. So, at Positive, we look after a multitude of products, but our mortgage desk is a big part of that as well. So what we're talking about today is becoming more commonplace with intermediaries, brokers, advisors needing support around it. And we'll get into that a little bit more.
Absolutely.
But that's how I'm here, because brokers are picking up the phone to me going, Dave, help.
Yeah, and we're seeing that as a common theme we talked about the other day, didn't we? Alice, let's come to you. Quick potted CV for you, please.
Sure. So I have, similar to you, Dave, I think most people fell into financial services. I came back from travelling and wanted a job. And so I started working as a mortgage admin and said to my friends, I don't even know what a mortgage is. It's fine. I'll be there 3 months. I'll find something else. And actually, 3 months later, I was asking to do my exams, and that was 2014. So
The rest is history.
The rest is history. So since then, I've brokered. I was employed, and then I was self-employed, and I've worked for a couple of different specialist lenders. And I joined Saffron in November, so almost 4 months ago now.
Yeah, flying by. Excellent, thanks. And Dan, about yourself?
So, like the other two, and probably you, I don't think anybody in their teens wants to be in mortgages. We want to be in the fire service or a chef or a painter or something, a football
Retired
player or something
Yeah.
exciting. And that there might be a podcast topic there for
Yeah,
you.
I think so.
So, I started cooking for a living, but I ended up doing this. I can't even remember how I started getting into this 24 years ago in property. But over my career, I've moved more and more into complex niche lending, a few strategic moves to work with different people, and I've picked up different things along the way. And I now as I said in my intro, work primarily with large mortgages, with complex mortgages of all sorts of different. It could be anything. My cheesy tagline I give new clients is, I help people who can't get a mortgage for a good reason. So the circumstances are too complex, not normally too bad. And I can't remember the question, but
it's fine. It's fine. That's perfect.
That's what I do.
That's
and
really
why
perfect.
and
I can't
how
remember
got
the question
here.
either when I asked it, but that's because this year is my 39th year in this crazy industry. So yeah, I've been around a bit, so I know a few things, but not a lot about anything. So that's good. Anyway, let's move on then to our first question, which is around the multiple income borrower. Now, this category is evolving into a real niche of its own, and it's growing. So there is now around about 18 million working adults that are classed as multiple income borrowers. So those who are requiring more than one income to sustain the lifestyle and the living they want. And it isn't really even a lifestyle, it's just surviving in a number of cases. So that's what I want to talk to you about from this different dynamic. So if I come to you first, Dan, what are you seeing in this market for customers with multiple incomes?
So you gave us a couple of days warning on this, thank you. I actually hadn't realised it was such a big thing because I specialise in complex income. I see this a lot. So it was really interesting to read the excellent article you wrote recently.
Thank you very much.
And see that lenders are thinking about this and taking it on board. But yeah, I mean, I'm going to quote you actually. People are no longer working just in a single job and doing a single thing. I always describe, that type of mortgage broking, arranging mortgages for cereal box families. You got 2 people, 2 jobs, 2 cars, 1 dog, 1 house, couple of credit cards, and we all know what we're doing there. But life is becoming more variable. My son's nearly 20, and I see him and his friends not looking at the traditional earning routes and thinking I have to do what the people before me did. They're paving their own way. And that might well mean, I've heard a few people mention this recently, taking on different income streams, different jobs, a job in the day and a job in the evening, or confidently pursuing a hobby that might pay them. My son's a very good drummer, and he will certainly be and DJ, and he will certainly be pursuing both of those routes if he can, be as backup plans as well, which is cooking, which I started out in at his age. So yeah, from own experience and what I'm seeing in the industry, people are definitely asking about, can I get a mortgage based on more than one income stream? And lenders are definitely realising we need to get around this, particularly the smaller lenders.
Absolutely. I mean, your son's that classic Gen Z. So a lot of 60% of these Gen Zs have, don't know why I've gone all American, Gen Z. Look at that, change it straight away.
That is the phrase, isn't it?
I know it is, but we are English, British, so we should say Z. But they've got this side hustle, and it's normally some sort of, it can be a lot of things, a digital thing, something on some sort of social media channels that I don't know anything about. So, but that's interesting. David, what are you seeing?
Well, all of the business that I deal with comes from an introducing broker. So I don't deal with the consumer or the applicant directly. So effectively, that applicant has gone to their mortgage broker looking for assistance. And I think what the general feel at the moment is your traditional, more mainstream high street lenders, it's a black and white situation. When you get into the specialist world, it's more grey. There's opportunity for conversation. And the reality is, Dan, talking about your son there, that there are different income streams happening now. I mean, look, my boys are 2 and 4, but they love watching little kids on YouTube unpacking toys. And they're probably earning more than all of us put in this from the comfort of their own home and not even going to work. But the reality is, things like that will become legitimate income sources going forward, and lenders will have to get their heads around that becoming more commonplace, which at the moment isn't. So, and then you've got the other side of it with the doom and gloom of the country, cost of living, is that people are having to take secondary, third income streams to actually survive. And that could be a self-employed job, it could be an employed job. Funny enough, on the way up here on the train, I bumped into a friend who's taken over a pub recently, but he also DJs, and he also he does a bit of singing as well off the side of it. So he's got numerous different income streams. Some of them he can evidence tangibly. Some of them are a bit more difficult to, but they're all legitimate. They're all going into. And he struggled to get a mortgage. He was telling me a couple of years ago he struggled to really get a mortgage. Ended up finding the lender in the end, but he went to 3 brokers who said, "I can't help you." The 4th one then placed him with a specialist lender. So it is becoming more commonplace, and I think that will only grow as the world evolves.
So let's Alice, let's come to you first. Obviously, let's see your view from being out there, seeing a lot of brokers on a daily basis. What the kind of questions that you're getting?
Yeah, so I've seen it more in where I've been in specialist lending for a couple of years. I've seen kind of the more in the last year or so. And actually, I was reading an article from one of our peers this morning where it said in the last 3 years, 5.5 million people have got an extra income. And there's, I suppose there can be quite a few reasons for that. I know personally, one of my best friends is on her own. So actually she has another job to keep her busy and to keep her seeing people. But for the majority of people, it's that extra income that you can't get the kind of, I call them almost slightly cookie cutter families where it's the 2.4 kids, white picket fence and Labrador. You just don't get them anymore. And in fact, yesterday I had it was almost perfect timing. We're coming on here knowing what we were going to discuss. I was chatting to a broker where this client had 4 income streams. And 2 were employed, 2 were self-employed. One was a limited company, one was a sole trader. And we kind of, which I think off the back of it, of just seeing 4 different incomes, and they were good incomes, each of them, you kind of think, oh, but actually when I spoke to the broker, we could work out that the time that he allotted to each of them still meant that he could function and was actually sustainable, not only now, but for the term of the mortgage. And we were able to agree the case on the pretense of, okay, yeah, this makes sense. And we've been seeing so much more of this secondary income and people saying, okay, well, how do you assess this? And actually, how long do they need to be in their second job? Because I suppose more than ever in the last couple of years, income hasn't been going up with the cost of living. Interest rates have been shooting up, and it's not as affordable as it was to just have one income as it was a couple of years ago. So the feedback I've been getting is that we're getting a lot more people with it. And we often, well, I know that we certainly do often see cases with at least 2-3 incomes per person. And that's where people like ourselves can take that view on it and say, well, actually, yes, we can make sense of this. We're not putting these clients into tick box categories, and we can take a view on it. But yeah, that's the feedback that I've been getting a lot.
Cool. So just want a couple of more questions, but we talked about Gen Z. The other category that's seeing the growth is the unretired. Yeah, so you've got a growing number who have retired and then realise that life isn't so great when half your income's gone and are having to come back into employment, either self-employment, contracting, that kind of thing. Are you experiencing that?
Yeah, I see. Currently, I'm seeing more of that than the Gen Z.
Yeah.
My client base is more aligned to that client, and it's not always just because they have to. Sometimes it's because they don't want to stop working, and then they're in a position to keep their mortgage running. It's better for them to do that.
Yeah.
I mean, I arranged a mortgage. How much can I say without giving stuff? Arranged a mortgage for he was a 70-year-old doctor, had his own medical practice in the UK. He also flew abroad to carry out his profession, and he also ran a medical legal practice where he was a consultant, and he had all of these streams coming in, and he was 70. And we showed the lender that he had colleagues who were working over 80 to get their comfort with him continuing to borrow. And lots and lots of older clients wanting to run their mortgages longer, maybe not wanting to downsize yet. Perhaps they got stuck in an interest-only trap years ago and that was deemed the right advice. But for all sorts of reasons, we've got people who are older, perhaps approaching 70 and still working and still wanting their mortgage. But they often get tired of the constraints of employment, but have become very good at what they do. So they start their own practice, they start their own business, and it's all about how you show the lender the longevity, the story, the history, the future, and get an underwriter comfortable with the fact that this person can afford that mortgage.
Absolutely. To that point, Lee always states, and this is a great way of any broker wanting to tell a story to a lender, three things: past, present, and future. Give us the reason why we should trust what they've done. Where are they now, and how's it going to go? Yeah. And that really helps us sell that idea to an underwriter who might be slightly confused by it. Yeah. So sticking with you, Dan, just very quickly, obviously with more complex cases, there is a challenge around, is there more challenge of inappropriate advice? So how, in your experience, are firms coping with an increased advice risk?
Understanding the client well. You can't do this if you're dealing with lots and lots and lots and lots of cases all the time. You need to be in a position. I mean, there's two ways for a mortgage broker to work with complexity. One is to refer to a packager, to a company like Dave's, who will take that complex stuff on for you and help you place it, or change your model away from volume, upskill into the complex stuff, and have an appropriate fee charging structure which allows you the time to work on less cases and put more time into it. Then you're in a position where you can really spend time with the client, understanding their needs. Is the advice you're going to give put them in a better position than they are now? That's a key question. It may not seem like the advice that everybody would want. Mortgage into, let's do 70 again. Mortgage past 70. That may not seem like someone may say, why are you arranging a mortgage to someone past 70? Well, they're 69 and they have the mortgage now. We're not putting them in a worse position. We're helping them continue in the best way they can. So there's understanding the story and spending time with the client, understanding their needs. And then there's exploring all of the options, speaking with them again, discussing it, looking at how it's going to affect them, and then making a recommendation that puts them in the best position going forward. And your point about understanding their future, how long do they want the mortgage for? Have they got equity to downsize? And so on. It could be any question, but asking lots of questions, understanding the story, and making sure it puts the client in a better position than they are now.
Fantastic, thank you. Just one more on this one, then we'll move on. Dave, are you in the from a packager world? You might have see this, but are customers bouncing between advisors?
Yes.
Yeah.
In short, yes.
Yeah.
So take my friend that I bumped into on the train there.
Yeah.
He spoke to 4 different brokers.
Right.
The 4th one hit gold and done what a broker should do in the market. But yes, we are now seeing that there, especially with AI, consumers are jumping on AI. What can I achieve if I'm 70, for example, or what's in the market, etc. The information they get back, we know is not going to be factually correct 100% of the time, but it will give them a steer. And they are then playing off different brokers to see who can get them the best deal. The market is definitely a lot more competitive. I think to Dan's point, if you're trying to do as much volume as possible, you're potentially becoming a jack of all trades and a master of none, because you can't physically navigate the market on that complexity. You have to understand your client and understand the genuine lender and options that you can present to them for the best outcome for them. But I think there is definitely more consumer choice out there. They're looking around more. Yeah.
Cool. Good. Excellent. Let's move on then to, and probably more for, let's ask Dan first, really. Looking at the market in terms of mortgage broking evolution. So we're seeing quite a lot of consolidation at the moment at all levels, at network, firm, individuals, etc. What impact do you think that's having on advice models?
What do you mean by consolidation?
Firms realising that they're better off not being on their own but together, or looking at different ways to do things. There's consolidation in the lending sector as well, as you've seen. People are buying other people. But I just wondered if you had any thought on, are you seeing that from a firm perspective?
No. I mean, our firm is our firm, and the lenders we use are the lenders we use, which is all of them basically. No, but any progression, any upskilling combination of skills is going to help. I've seen the opposite, actually. I've seen mergers. I've seen, won't mention names, big lenders taking over smaller lenders.
Yeah.
And then they swallow up their proposition and remove their niches. I saw this many years ago with in about 2017, 18, a very, very niche mutual got swallowed up by a bank, and that was a hole in the market was created. They did some things that no one else did, and it's about to happen again. There's a smaller lender being swallowed up by a bigger lender, and their niches may not be replicated. I don't know. I've certainly seen that.
Okay. Have you seen? I mean, it's coming to you. Have you seen broker firms not, looking at consolidation or thinking about how they operate?
Yes. Whether it's they're talking about even kind of as small as changing networks, or I suppose similar to what Dan said, almost buddying up with another company and kind of working together. I have a lot of people kind of both in this job and previous jobs asking my knowledge on different companies, and of course in this job we've got to be careful and we can't really kind of give too much away, but them saying, well, we know this and actually we're looking to then merge with them, and then you see the merger go through. And I feel like, similar to what you were saying as well, Dan, when I go on LinkedIn, probably every week or so I'm seeing people, great to see we've partnered with this, or we're now one, or we've changed now. There's a lot of change, and actually I think that's quite positive, because the mortgage market is still very strong, and that actually people don't then need to stick to what they've known historically. They can branch out and effectively add extra tools to their belts. So yes, I do see it quite a lot, and I have a lot of those conversations with brokers as well.
We're seeing, as a lender, quite a bit of network flipping.
Right.
Large and kind of linked to that advice question, because networks will decide what they risk they want, and therefore won't allow a new. In fact, that's come to you because you must see this from probably an expat, another perspective, where certain networks won't allow it, and they come to the likes of yourself.
Yes.
So how are you seeing firms kind of looking? They want to diversify, but they're not allowed to. They're handcuffed by their current regime.
Yeah, absolutely. The hand ties are on. I think every network has a restriction of some sort that they're. I don't know one AR that's 100% happy with their network.
Yeah, absolutely.
Because much like you just said, I get asked all the time, what's the best network you deal with? And we service the lion's share of the network and club space. Not one broker is 100% happy with their situation. But the reality of that is, you take a network that restricts their member advising on an expat, then it comes to us. Our contractual agreement says, well, actually, we're not advising on this because we package on a mortgage desk. But then they go to their network and say, you won't really let me do it, but Positive will do it. Can we do it? And then it's a yes. So it's a convoluted way of doing it. But there is a frustration, I think, from the broker of not being able to do things that they maybe know how to do or want to learn how to do or have the capacity to do. And then coming into someone like us, because we're maybe sometimes seen as a third layer, where actually they want to transact on that business themselves. And that sometimes is enough to turn ahead and jump ship. But also brokers are creatures of comfort, and they like what they know. And if they're overall happy, then they will stick with it. But there is a lot more to your point. You do see a lot of transitions and moving around on LinkedIn, and definitely with broker firms as well. I think firms will look at each other and go, right, you're really good at this, and we're really good at this. If we come together, can we be really good at all of it and take a bigger market share? And we've seen quite a lot of that recently.
I haven't seen that stuff because I'm in a DA firm.
It's not as
we
obvious.
do what we do. But what I have seen is the reason for it. Hearing you all describe it, is I hear so many brokers I know talking about they know they need to get into more complex stuff, and that would be the reason for
absolutely
asking those
and
questions.
It's funny. I've been to 2 network kind of strategy days already this year, and both of them have said we recognise that we're underweight on specialist lending. So all of them have recognised that the high street gravy train is limiting, because 18 million of us who need mortgages don't use the high street
Don't fit that
anymore.
mould. Yeah.
So you've got to evolve and adapt. Otherwise, you will lose your members and your ARs, because they're going to go where they can
Absolutely.
do more. Right, let's stick with the role then of packages. So, and packager evolution. So, Dave, is the role changing, or question one? And if you are, how are you changing? How are you adapting to the modern day broker?
I mean, looking at the mortgage desk alone, the role is changing because lenders are opening up more direct agency to brokers, and networks are now bringing, to your point of specialist lending, bringing specialist lenders onto their panel. So they are broadening that, which effectively takes food off our table.
Yeah, absolutely.
But we still service maybe the newer broker to the market. Sometimes maybe the lazy broker, if I'm allowed to say that.
Yeah. No.
I think,
It's,
do you know, you say this is a bit too much at the moment, or I've got too much on. Can you transact on this? But I think specialist is becoming more mainstream because a lot of the population don't fit high street now. So although it's still specialist, actually a larger percentage of the population is needing that specialist lending solution. So brokers organically are having to come to terms and learn with that actually learn those lenders and so on. So that some of that comes into us. How does it evolve from our point? So lenders that will offer out direct agencies are then coming to us and giving us a packager exclusive or restricted access products, which maybe benefits the broker or the client, should I say. But in some cases, and the broker would come to us for that part, but then they may transact directly if it fits within the rest of their product range. As we go forward, I think definitely on the first charge side of things, I would say that probably more specialist lenders are going to offer out direct agencies to brokers directly, and that will become wider available on network panels, and then the panel that we actually have a value in offering to the broker will become probably smaller, or it will become an exclusive restricted access product range or something along those lines.
Yeah, I mean, as I said, it's more brokers are getting more comfortable doing specialists directly, because
It has to be.
that's a bigger share of what's coming through their door in terms of lead opportunity. So, yeah, that's the challenge for you guys, I suppose. So let's move on then to one of the other challenges. I see it as a huge opportunity, but I think it is a challenge for all of us, which is the future of the market in terms of AI. Yeah. So stick with you, Dave, in terms of AI and packages. What's your view on that? And what does a risk of being able to chat to Gemini about my case rather than going to see you?
Well, it's got some evolution to go through at the moment before it can actually deliver what you type into it as factual information back. Is it a threat long term? Potentially. I'd probably say, look, if you look at it at the moment, if you're looking at maybe your top 6-8 mainstream lenders, going forward, you could see how that might become an AI solution, because the consumer types in, I need this and this, and it's straightforward. They're on PAYE, they've got clean credit, they've got a good deposit. It's a tick, tick, tick. That might be a threat from that point of view, from a broker perspective. In the specialist world, I think it's far too complex. It's a bit like going off piste here a little bit. We're looking at second charge and bridging. I don't think AI is a way off from being able to ever advise effectively or correctly on those kind of products. So where AI can come in to complement what you're doing will be the admin, which we all hate, more and more of it as we have to do the jobs we do. And that will speed the process up, which is a win-win for everyone involved, especially the consumer, because it's a much smoother process. But from the point of an advice point of view, or effectively sourcing a lender, I think it's a way off.
Dan, your thoughts on AI?
Same. AI is a lot of fun. It's very useful at certain things. If you want something reworded, it does it so fast. And you can say, reword it in this tone. So I wrote this yesterday, reword these notes in that style. It will do it in seconds.
Absolutely.
But it can't do what happened just before we started this podcast. I asked you and Alice, if Saffron Building Society could do something slightly outside of the norm for a really good client, gave you the story like we're talking about, said, could you do that? You both said yes, come to me if it gets rejected. AI is very, very good at reading quickly. It is not good at coming up with new ideas. Maybe it will in the future. But my job is largely complex mortgage broker. My job is largely asking lenders with whom I have reputation and relationship if they can do something slightly outside of the black and white. You mentioned grey earlier.
Yes.
I always say I play in the grey areas. That's not something AI can do. But let's caveat this. In 2 years' time, the four of us might get together, look back at this and say, what the hell were we saying? We're all lost our jobs. We don't know, do we?
No,
But,
look, I agree, and I'll come to you in a second. But it's a topic that I'm kind of heavily getting into and trying to understand, because I think that's the best way to beat any threat is to be a force for good with it, rather than trying to bury your head in the sand. But one of the stats I heard, probably from AI, is you're going to see 1,000% growth in AI capability in the next 12 months. That's the pace of it. But Alice, let's come to you. How are you seeing it already impact you, or from just your experience?
Yeah, so I think potentially if you were a high street, mainstream lender, you'd probably see it more, because I think it now is just the point, I think you were saying it earlier, Dave, that people can literally put their details into Gemini, GPT, and say, which lender could I go with? And that's fine. That's fine for those cookie cutter people that we talked about earlier. But actually, that's the case that we talked about just before this, Dan. That's the second one of the day where we've discussed it and said, well, it's not in policy, but it's not outside of policy either. And something that we do at Saffron, which I think everyone knows about, is that we have a chat with the underwriters every morning to say, okay, this case isn't inside, it's not outside, it's in the grey. We're dancing in the grey in this case. Can we look at it? And I actually was on the phone to the underwriters at a very windy Euston this morning discussing that, saying, well, it's not inside of policy, but it's not out. And they said, no, you're right. Let's see what we can do. And they came back and said, yeah, absolutely fine. We can take the common sense approach on it. And that is always going to be the bit that AI is lacking in, is that, okay, let's take a view on it, which is where, especially as kind of human lenders rather than tick box lenders, that's where I don't, once again, it might be on those that there's actually a robot sitting here saying this is what Alice would have said in a couple of years. But I don't see that it can replace the things that we do in our industry. Maybe on the big mainstream, but I don't think it could make that much of an impact as a human still can in ours.
Yeah, the key is I don't think it needs to replace advice is not a problem. Yeah. Getting advice from the right person, I don't think is a problem. Obviously, what AI can do over time is create a level of consistency, because the advice you'll provide will be different to potentially what I provide and what you provide, because you get your own moralistic standards and viewpoints of the world in there. And thankfully, our beautiful regulatory system allows that. It allows people to take a different route as long as the outcome is typically the same. I think the rise with AI is, I'm sure you've all heard of it, is this agentic AI, and that's basically it learns. So as it as it develops, it's learning and doing more for you. Yeah. So agentic AI is starting to come in to a classic example. If I use a really simple one, so a logistics company, it's got 250 vans on the street, thousands of orders a day. At the moment, if something goes wrong, there's somebody beavering around, rescheduling. Oh my God, agentic AI can do that for you. As an example, it can reschedule, it can logistic, it can just put people in the right place at the right time. Yeah. Can't drive the lorry yet. That will come, as we saw on the way here. We saw one of those weird cars. But I think it's wrong of us to say, oh, I don't think this will ever happen. It will. It's just at the pace and at the thingy. But I personally don't think that it can possibly do advice to the level in our markets, the specialist markets, yet. It can already advise on a straightforward case.
No, not the stuff the people in this room are doing.
No. Yeah, but for me, it's how do you use AI to free up more time for us as humans to do an even better job. I think that's the key. Excellent. We're having a good chat here. So I'd like to talk more about this kind of the future. And one of the things, being in the mutual sector, we hear the phrase a lot, about the modern mutual. Yeah. So I'm really keen to understand what that phrase means to you, and then I'll explain what I think it means to me. So if I come to you first, Dan.
Okay. How long have we got?
About 10 minutes.
Right. Okay. I'll try not to take all of it. So I do mutuals or building societies are the lenders I spend most of my time talking to. I occasionally get to use a high street bank. Get very, very frustrated. It's fine when it flies through. You know, your Halifax mortgage offer 1 hour after keying the application, after an automated valuation. Great, absolutely superb. I don't get many of those clients. I spend most of my time speaking with the mutuals, asking them to push boundaries, asking them to consider things they may not have done before, asking them to do what you did twice this morning, which is use common sense and look at something which is almost in policy but not quite. That's the stuff mutuals are doing well. Mutuals tend to be a bit slower and clunkier on process. For me, and this is where AI can come in, for me the modern mutual integrates with new systems, new policies. All mutuals are talking about new systems. They've either got them or they're getting them. But it doesn't always speed anything up. I was about to start quoting my Change Not
Tweaks.
I spoke last time I was on this about how a lot of building societies, not lenders, but it tends to be building societies, add policy to policy to policy to policy, but don't remove any of the old stuff. And then it just makes a mess. And adapting, getting rid of old policy which is no longer relevant, and finding ways to be a bit quicker is the modern mutual for me. But not letting go of all the good stuff, and maybe the two come hand in hand. Maybe a small building society is never going to be as quick as a big bank on getting you're never going to get a mortgage offer out 1 hour after the application has been keyed. Or maybe you are, but I doubt. I haven't seen it, and I don't expect to see it, nor want to see it, because I haven't approached a mutual on behalf of a client to get a mortgage offer in 1 hour. I've approached them to get a physical human decision on something. But it's integrating those. It is combining the ability to think and innovate and do well with modern technology and speed, I think.
Yeah, no, that's cool. David, if I can come to you for your thoughts on that.
I mean, I pretty much echo what Dan's just said, because the biggest frustration we get is from our introducing broker saying, why is it taking so long? Now, that's not always the case, and it's unfair to say that is the case. As market appetite grows, we were talking about earlier, lender appetite grows, they're great, you've got a product, you're swamped, right? And then SLAs fall behind. There is an element of education from a percentage of brokers in the market that don't understand how a specialist lender works, or the timestamp that comes on that, and it's not going to be a quick decision, an offer in an hour situation. So, and that keeps me in the job, because that's what I go and do is explain how that works and the process on it. So I think it would be the fact of sometimes clearer, quicker communication. Things are gonna speed up, slow down, depending on what the market appetite is. But again, putting that in a clear stance that it can be presented back to the broker so that they can set the expectations with their client.
Cool. Alice, what about you? What does it mean for you?
I always have. I don't want to echo what anyone's just said, but kind of similar. I think that, what is it that someone told me before I joined Saffron? Building societies love a spreadsheet. We all just love spreadsheets. And it's kind of, potentially we could see things slightly more streamlined, whether that's through AI, whether that's through process. But I think that we will just carry on going in the way of that common sense. Times are changing. Things aren't the way that they used to be. They aren't as black and white anymore. And that's why we've seen this huge rise of specialists, even in the last couple of years. And I think that we will just carry on seeing, I was discussing this the other day, that even 2-3 years ago, you'd get a case and it'd be a quirky case because there'd be one thing that's slightly outside of kind of the norm. And now you're just seeing almost the layers of all these different ones. And so this is where we've seen kind of the rise of different sourcing systems like Knowledge Bank, where you can suddenly put all these different ones in. and you're seeing lenders constantly adapting to that. And I think that personally we'll just see that it will carry on moving in kind of the same direction, but maybe just slightly quicker.
Cool. So in summary then, it's don't lose the heart of what we do, but just get a bit more efficient at doing it.
What about you, Tony?
Well, for me, I go back to your point and say, why shouldn't the mutual do it in 1 hour? Right? That's where my head is at. And as a business, that's where our head is. We're we're one of those mutuals who is investing millions into a new system. And our view is it's the 1 day mortgage. Why shouldn't it be? If we constrict ourselves to going, oh, we're a mutual, it's okay to be longer. You've lost, you've failed. So for us, I wouldn't do it in an hour if it meant I ruin what we are and how we are and who we are. But if I can keep all that and just use tech to drive that advantage, why wouldn't you? So that's my view. Mutuals are seen as, aren't they slow and use spreadsheets and fax machines, because some still use fax machines. Got a funny story on that as well, actually. Some of the societies are like that. We call them the zombie societies that know that they're there. They're not quite sure why they're still there. They want to change, but they don't know how to, or physically can't. Capital ratios, etc. Fortunately, we're not one of those, and we're very much focused on, well, what does the modern mutual look like? And for us, 2 halves of our coin, we've got a customer base because we're a building society with retail deposits and branches and online, and then we're 100% intermediated, which means we need to address and deliver what you need for your clients.
You've innovated loads in the last couple of years.
Yeah, we have, but there's a lot more to come. From a product, but also a technology stack as well. Our view is use tech. What do we call it? Tech heavy, people light is our approach. So let's use tech to get it to the right person who can do their job really well without loads of people beavering around them.
And I guess that is the thing, is if you've still got the ability to have those conversations we've been talking about, that's outside of criteria, whatever it may be, and an individual can go, yes, we can do that, but then effectively continue the process as though that conversation didn't happen. As though it's a straightforward case. Well, then, you're winning.
So that has flown by. I've got just one more question. I always like to finish on putting our soothsayer hats on in terms of where's this year going. I suppose to tee that off, specialist lending market this year is targeted to be about 35 billion, and that's looking at growing to around 55 by 2029. So it's starting to become a significant portion of the market. But that's in the future. What's this year looking like for you, Dan? What do you think's what's going to be the reflection at the end of the year?
I think last year was surprisingly steady for a while. Up until around Christmas, it slowed down. I think people were worried about things happening in the global economy. This year, I feel like people have got fed up with waiting. And Dave and I were talking just before we started about how unbelievably busy the last couple of weeks has been. I think in the last month, I've seen almost every type. I deal with a broad spectrum of mortgage types, and I think I've dealt with almost every type of inquiry in the last month. Crazy range and volume of inquiries. And I think it'll be a really, really exciting year. Lots of great deals done, and lenders having to take common sense views on whether they want to lend if they want to get those deals done. And so far they are.
Good. What about for you, Dave?
I'd say a market that moves forward, not sideways. So both from, I suppose, the consumer point of view, not kicking the can down the road. I agree what Dan just said. It feels like people have had enough and actually they're going to go, right, bite the bullet, let's get on with it and do it, which is great. But also from a lender perspective as well, it did get a bit clunky last year. You got right to the end stages and it was like, you're asking for more and more.
Yeah.
Let's get past that. You want to lend the money. Let's get the money out. Let's transact with the client, help them out and move on to the next deal, but service the market. So hopefully we see more of that.
Good. What about you, Alice? Last words?
Yeah, so similar. The feedback that I've been getting from the market is that brokers it's been unprecedentedly busy. I hate using unprecedented. It always takes me back to COVID, that word. But
next slide.
yeah, next slide, please.
Unprecedented times.
Yeah, it's been unusually busy that they haven't seen it like that before. And actually, a lot of the feedback that I've been getting is numbers-wise, they're almost like for like. But actually, like Dan said, it's suddenly all these different cases. It's suddenly slightly different ones. They're taking longer. You're having to kind of do more due diligence, more customer care and stuff like that. And I think that that's absolutely fantastic that the market is still evolving, that we are still going in this direction, that we haven't just gone back. The last time we were sitting on here, we were talking about how the budget, everyone had kind of just stopped and decided they were not going to do anything until that came out. And actually, it seems like all that backlog of people there have just carried on going. The scaremongering stopped, and it's
The dust has settled, and then
get on with it or don't do it. Yeah.
Well, let's leave it there. Wow, that time has flown by. 46 minutes of really good content, and we could have carried on forever. So thank you to all of our guests, Mr. Dan Gracie, Mr. David Coleman, and my wonderful super co-host, Alice Waits. Please follow us on LinkedIn. And that's so you can see when the next episode launches. And don't forget to follow us on your favourite channel so you get notified when the next episode is released. If you are a watcher of podcasts, then you'll be watching this now, but head to Spotify or YouTube. They're generally the best places to watch this if you don't just want to listen. And I'll give you my standard health and safety warning, as I always do. If you're going to watch it, don't do so whilst driving or operating heavy machinery. There we go. It's got to be safe. Well, that's it for another episode. So it's a goodbye from me and it's a goodbye from them. Goodbye.